So the brutal Fed hikes that has depositors saying, we're going to be taking the money and just running with it. And the fact is, money has been fleeing deposit accounts. So banks are raising capital. And where all is this money going? It's going into money market accounts, money market right now. So indeed, just as Steve Miller always said, is they're going to take the money and run. That's exactly what they're doing. And why? Is because the money market has a higher return on their rate. And this is causing a lot of problems. And there's no relief in sight from what the Fed mindset has been. You had the St. Louis Fed president saying, we need 2 more Fed hikes. And that's just crazy. And of course, you got Jamie Dimon with JP Morgan out there saying, oh, we need 6 or 7 more. And that's just, he would absolutely love that. And he's really just talking about his books out there, because that would cause banks to go out of business, giving you a lot less choices, and he can gobble them up and increase the fees. Because why? Monopolization. So this is kind of scary times where we're at when you see things like this, and it's brutal because the bond market really wants to reverse, but it's having a hard time because of selling of mortgage-backed securities. And that's coming in due to these banks having to raise all this capital, and they have no alternative but to sell their assets that they have. So let me show you here on a graph here, and it's very easy to see how the bank deposits have been really fleeing. And since the Fed hiking rates in 2022 right here, the Fed starts hiking their rates, you can see that bank deposits are leaving. And where are they going again? They're going into the money market, because that money market is just paying them more. Then you had the banking crisis right here, where we saw happen in March, and it really accelerated things, but it hasn't exactly stopped. And it's going into early May on this graph, but since then we've seen a little bit more of a decline, but it has not stopped all the way. And that's why you continue to see the persistent selling in the bond market. Now, eventually this is going to exhaust itself and the fundamentals will take over, but this is what I wanted to show you. This graph, when the money leaves deposits, it's going into the money market, and those people have to get their money back. And the only place all these banks can do to get it is by selling assets like their treasuries and mortgage-backed securities. So that's why you've had this persistent push of sales that has been hurting prices and causing rates to be stubbornly high. Coming in thinking there's going to be a turnaround, but the persistent selling is happening. So the Fed, that's why I'm bringing it up and demonstrating it to you. It was for the year 2022. Most consumers felt that they were clearly in an oversold territory beforehand. And this is for 2022. So it might actually be worse from the selling, or some also good economic data that shows a reversal. By far, the number one reason for people job support data, home buyers, or perhaps think they by the way of some encouraging inflation news of the responses on here. But eventually, the National Association of Realtors surveys that was almost going through this, 50% of first-time home buyers, the market they need a down payment telling you on several occasions, only 11% of this lower rate can have they believe as low as 5% or lower. And that there is deep selling money, buying is coming out of the rent, which are this should be the bottom. And we really have to help educate people out there. Same thing, and hear the same thing. Purchase a home despite the prevailing turbulent as economic conditions. Remember, and the markets are not really engaging in meeting with a realtor or a mortgage professional. We have to just get the worst out there indicators and hint towards a willingness. So for a reversal, let's go back and look at just a matter of time. And as you can see here on May 10th, where I was telling you guys, thinking there's going to be a turnaround, we got a decent but the persistent selling. So you can see that mortgage rates decrease, and that's why I'm bringing it up. This is demonstrating the banking crisis that even started happening. Technicals are telling us we're clearly in an overselling mortgage-backed security, and all we need is either a respite from the bond market or some good economic data that shows a reversal longer. That perhaps right here, the new job support data is like or perhaps come by the way of actually encouraging inflation news upside after a downturn. But eventually, this you can see how many times, and I know it's going through this is tough, to reverse. But even the market coming in thinking there's going to be a turnaround, but the persistent selling is happening, and that's why I'm bringing it up and demonstrating it to you is that even the technicals are telling us we're clearly in an oversold territory right now, and all we need is either a respite from the selling or some good economic data that shows a reversal, and you can get that perhaps by the new job support data, or perhaps come by the way of some encouraging inflation news. But eventually this tide has to turn. And I know going through this is tough, but even the market participants are here telling you on several occasions with this lower wick that they believe that there is a turnaround, and that there is deep selling, but buying is coming in, showing that this should be the bottom. Same thing here, same thing, and here the same thing. So despite the prevailing turbulent kind of economic conditions, remember, markets are cyclical in nature, and every downturn eventually paves a way for an upturn. So we're seeing indicators that hint towards a willingness for a reversal, and it's just a matter of time before it actually happens.